Welcome back to Investing Talk podcast. We are focusing today on a company that's really gone through a radical transformation. It's CEA Industries. And this shift has created, well, massive swings in its stock price and really polarized investor opinions. The central question we keep getting in our submissions is pretty simple. Is CEA Industries a good time to buy now? Now, before we dive into this analysis, we really do urge you, our listener, to hit that subscribe button. Please leave a 5-star rating or a review if you find this useful, and comment below. Seriously, if there's a specific company you want us to look into, break down the source material for, just leave a comment and tell us. We really do build these sessions around what you're curious about.
Absolutely. And our goal today is clarity, really. We've gathered sources detailing the historical financial fundamentals of CEA Industries' old operating business. Then there's the highly volatile technical trading picture, and of course the crucial brand new strategic direction, which is centered entirely around these digital asset holdings. We'll synthesize all of this to give you a full balanced view of what is, frankly, an extremely complex investment case.
Okay, let's jump right in then, because you really can't discuss CEA Industries today without starting with the seismic news that changed everything. This company used to be focused on specialized infrastructure, right? And now it's made this colossal pivot into digital assets.
Colossal is definitely the right word, yeah. This isn't just, hedging a bit on the side. This is a company attempting to completely redefine itself as a kind of proxy vehicle. They're explicitly setting out to build what they're calling the world's largest corporate BNB treasury. I mean, the sheer scale of that ambition is what's driving all the current frenzy around the stock.
Okay, world's largest corporate BND treasury. What does that actually mean in practice?
Well, we need to put their stated goal into context. Their announced target is to own a full 1%. 1% of the total BNB supply by the end of 2025.
1%. Of the entire supply of a major digital asset like BNB. That's a stunning level of concentration. And why BNB specifically? Why not Bitcoin or Ethereum? Those seem to be the more common choices for corporate treasuries.
That's a great question, and it really speaks to their risk appetite, I think. Sources suggest this choice is tied to projections about the growth and utility of the underlying BNB ecosystem. But the implication for you, the listener, is pretty clear. This is a highly aggressive, very high-stakes bet. It's not a conservative treasury play. And they're acting on it. The sources detailing their recent moves highlight that just on September 10th, 2025, they bought another 30,000 BNB tokens. This purchase brought their total holdings up to roughly 418,888 tokens, which at the time of the announcement was valued around $368 million US.
Wow, $368 million. Exposed to a single volatile asset, basically replacing their old identity as an infrastructure company. That amount of capital allocation, it just fundamentally changes the company's DNA, doesn't it?
Oh, absolutely. It completely does. And the CEO commentary offers the rationale, or at least their view. Management sees this as a strategic maneuver to become the primary institutional entry point for BNB exposure. They're betting they can ride this projected wave. They anticipate something like $100 to $200 billion in institutional capital flowing into digital asset treasuries over the next few years.
Okay, so if the plan actually works, the potential upside could be massive. But if you're looking at the stock right now, what does this really aggressive move mean for your risk profile?
Well, what really stands out in the analysis is how the market is now treating the stock. The sources we look at explicitly position the company as a proxy for BNB price movement. Essentially, you're not really investing based on quarterly earnings from their, legacy infrastructure division anymore. You're making a leveraged bet on the performance of one specific digital asset, BNB, through a publicly traded stock. This pure play strategy is the primary and honestly probably the only driver of the current volatility and all the speculative interest.
Right. Okay, that's the speculation side, the big vision. But before we get sort of lost in the stars of this new digital treasury, we absolutely have to anchor ourselves with a reality check. We need to look under the hood at the traditional, keep the lights on operating business that supposedly underpins CEA Industries.
Precisely. Yeah, let's do that. We need to turn to the financial fundamentals, synthesized from their regulatory filings, the FY 2024 10K and the recent Q1 2025 10Q.
Okay, so let's start with revenue and profitability. What did the sources say there? I gather they reported some modest revenue growth from the old infrastructure side recently.
They did, modest growth. But the crucial point, and you really can't stress this enough, is that the company remains profoundly unprofitable. Net losses have persisted right across both those reporting periods we looked at.
Unprofitable.
Okay, yeah. For a traditional value investor, that's just a major red flag right there. Profit margins are thin, and the loss per share continues, showing a clear lack of operational efficiency in that core business. Plus, if you look at the management commentary on their forward view, well, there just aren't any projections in the source material that signal significant earnings improvement or, a clear, immediate path to profitability within the next, say, 1 or 2 reporting periods. It's just not there.
So we've got this really bold, maybe exciting vision on one hand, but the actual existing business model is consistently losing money. That leads us straight to the balance sheet and, crucially, cash flow. What's the picture there?
Okay, so there is one significant positive point here we should mention. They have minimal long-term debt, and that's actually quite important. It acts as a crucial defense mechanism because it significantly reduces the immediate risk of insolvency. It gives them some breathing room, some flexibility.
Okay, minimal debt. That's reassuring. But what about the cash they actually generate or don't generate from operations?
Well, that's the major negative. The operating cash flow is negative for both the full year 2024 and the first quarter of 2025. This shows an ongoing, pretty substantial cash burn. They are spending more money just to operate the business than they're taking in.
Okay. And what does that mean in practical terms for someone listening who might hold the stock or is thinking about buying it?
It means they're relying heavily on raising equity capital just for short-term liquidity. Think about it this way. If your business is constantly burning cash, you basically have 2 options, right? Take on debt or sell more shares. Since they have low debt, they're clearly opting for the latter. And selling new shares means increasing the total share count, which inherently dilutes the ownership stake of everyone who already holds shares. This constant need for financing puts this sort of perpetual downward pressure on the stock price, even if the BNB Treasury happens to perform well in the short term. It's just not a sustainable funding model for a non-profitable operation.
Right. That puts the volatility into a much clearer perspective. It's not just the crypto swings. And if we look at their competitive position, just briefly, back in that traditional infrastructure sector, the sources seem to highlight they face pretty stiff competition.
Yeah, fierce competition. And that weakness is critical context here. They're up against much larger, far better capitalized players. The sources we reviewed point to, frankly, limited product differentiation in their infrastructure offerings and a really small market share. This lack of a competitive moat, so to speak, means that without this big BNB Treasury strategy, well, the company would likely be struggling immensely just due to market saturation and pricing pressure. You could almost argue the BNB bet is a necessity born out of weakness, not just a bold strategic choice from a position of strength.
It's, like you said, a tired old infrastructure company suddenly announcing it's storing its entire value in, I don't know, rare digital collectibles. The old business barely registers anymore.
That's a pretty good analogy, actually.
Yeah.
So now that we understand the sort of weak fundamentals and this audacious strategy, let's switch gears. Let's look at the trading snapshot for those listeners more focused on momentum and timing. As of September 17th, 2025, the stock was trading at a pretty tight range, between about USD $13.90 and $14.70.
Okay, a tight range. And technical charting usually gives us some levels to watch, right? Support and resistance.
Exactly. Technical charting shows pretty consistent support, holding between $13.15 and $14. That suggests sellers tend to give up around that lower level. Resistance, on the other hand, is quite clearly defined up at the $15 to $16 range. Breaking through that upper level will likely need some substantial positive news, specifically on the BNB Treasury front.
And the overall trend, is it moving up, down, sideways?
The underlying trend is mostly sideways, maybe with a slight upward bias right after that latest BNB purchase announcement, but the momentum is still pretty erratic. What's particularly interesting here, though, is the trading volume and liquidity. Volumes are relatively thin, especially compared to the broader market or larger stocks.
Okay, thin volume. Why does that matter specifically for the listener considering the stock?
Thin volume is a major risk indicator. It means that when news breaks, whether it's good news about the Treasury or, a sudden negative crypto market correction, the price can move much more dramatically. There just aren't enough buyers or sellers readily available to absorb the shock smoothly. And furthermore, it tends to widen the bid-ask spreads. That makes it harder and often more expensive for individual investors like you to get in or out of positions quickly without significantly impacting the price yourself. It points directly to liquidity risk.
Got it. So more potential for sharp swings and harder to trade smoothly. What about technical indicators like RSI or MACD?
Well, looking at the indicators, the Relative Strength Index, the RSI, is currently hovering near neutral ground, somewhere between 45 and 55.
Okay, neutral. So not overbought or oversold.
Exactly.
which tells us the stock isn't technically overheated or oversold right now. It confirms that the current price action is mostly a kind of waiting game, people watching for the next catalyst. And the moving average convergence divergence, or MBD, also isn't showing any clear bullish crossover signal yet. This signals a lack of compelling short-term momentum purely from the technical side. It feels like the technicals are waiting for the fundamentals, or in this case, the speculative BNB progress to dictate the next major direction.
Okay, given all of that, the weak core business, the huge BNB bet, the thin volume, we absolutely need to highlight the critical stock-specific risks, the ones cited right in the company's own filings. These are the real danger points you have to be aware of. Definitely. Number one is those persistent net losses and that negative operating cash flow we talked about that constantly threatens shareholder dilution through more share offerings. Number two is high execution risk. This might be the biggest factor, honestly. This aggressive 1% BNB expansion plan is entirely unproven. There's no guarantee it will work, and it may simply fail to deliver the kind of returns needed to offset the operating losses from the core business.
Okay, dilution risk, execution risk. What else?
And finally, there's extreme concentration risk. We touched on this earlier, but it really cannot be overstated. By focusing so heavily, almost exclusively, on building this massive BNB treasury, their entire business model is now incredibly exposed to huge, instantaneous swings in the digital asset market. If BNB corrects sharply, the value of their primary asset just tanks immediately. Regardless of how well their tiny infrastructure division might happen to perform that quarter, it won't matter.
Right. And just a quick note on insider activity. Did the sources mention anything there? Buying or selling by management?
Yeah, we looked at the Q2 and Q3 2025 reports for that. There was no significant insider buying or selling reported during that period, which suggests that while management is making these massive strategic bets with company money, they aren't necessarily capitalizing on the resulting volatility personally with their own shares, or at least they aren't reporting major moves that cross the disclosure threshold.
Okay. So let's look ahead then. What are the key dates or potential catalysts people should be watching? What could move the needle here?
Well, the biggest definite short-term trigger is the next earnings release that's scheduled for November 14th, 2025, covering the third quarter. This will be the first major opportunity for the market to really scrutinize how the early stages of this BNB strategy are actually being reported on the company's books, how they account for it, the costs involved, etc.
Okay, November 14th. And beyond that specific date?
More broadly, you just have to keep a constant eye on any updates regarding the BNB Holdings expansion plan itself. The market's reaction is going to depend entirely on execution versus those ambitious targets. Are they actually making steady progress towards that 1% goal, or are they stalling out? Like we said, ambition is cheap, execution is everything here.
Makes sense. What about maybe longer-term drivers? Anything else on the horizon?
If we look a bit further out at the bigger picture, there were two new strategic advisor agreements signed back on August 5th, 2025. These were specifically focused on digital asset growth. Now, the success or failure of these advisors in actually forging key strategic partnerships could potentially radically change the company's trajectory. That's a wait and see.
Partnerships could be key. And what about institutional money, ETFs, index funds?
Exactly. We also need to watch institutional activity. There are continuous ETF portfolio rebalancing reviews. There's one slated for around October 25th, 2025, for example. And then there are the institutional holdings disclosures later in November around the 22nd. These could affect the stock's float and overall sentiment. If, and it's a big if, CEA Industries starts getting included in new digital asset index products or specialized ETFs, it could force institutional money to take a position, which would add significant buying pressure.
Okay, so potential institutional tailwinds. Now let's turn to let's call it the speculation corner.
Yeah.
What's the unsubstantiated industry chatter, the rumors driving some of the social media buzz around this stock?
Right, the rumor mill. Well, first, there are persistent rumors circulating about a potential strategic partnership with a major established crypto platform. The idea being this would help fully institutionalize access to BNB through CEA Industries.
Okay, big partnership rumor. What else?
There's also quite a bit of speculation regarding a possible BNC-branded on-chain BNB yield product launch. This rumor suggests they might try to leverage their massive BNB holdings to generate a new passive yield revenue stream. That could potentially help address some of that negative operating cash flow problem we discussed. But again, this is pure, unverified speculation right now. No official word.
Yield product. Interesting idea, but yeah, just a rumor. Anything else bubbling up?
And lastly, there's this persistent kind of low-level chatter concerning M&A interest, mergers and acquisitions. The speculation here is that certain fintech or blockchain conglomerates might be eyeing CEA Industries, not for its traditional infrastructure business, obviously, but strictly for its treasury profile, essentially treating an acquisition as a way to gain backdoor control of that massive, strategically accumulated pile of BNB.
Buying the company just to get the crypto. Fascinating. Okay, this brings us towards the synthesis, the summary of the investment case here. We clearly have a company with this extreme duality, right? One side is characterized by really weak core fundamentals, unprofitable, burning cash, high dilution risk. And the other side is defined by this incredibly strong, but also incredibly risky speculative potential, driven entirely by the bold BNB treasury strategy.
Exactly. And when we combine those fundamental weaknesses, the very high execution risks involved in the BNB plan, and the current technical uncertainty, the overall assessment provided by the sources we synthesized results in a highly cautionary rating.
Just 3 out of 10.
3 out of 10. Okay, that's quite low, and that rating isn't arbitrary, right? Let's break down the pros and cons driving that.
Right. We have to acknowledge the pros first. They do have a massive speculative catalyst in the BNB holdings and the news flow around it. And that minimal long-term debt is a plus, as it keeps the immediate insolvency risk relatively manageable, gives them runway.
Okay, speculative catalyst, low debt.
Oh.
But the cons? But the cons are just overwhelming. For anyone resembling a traditional or conservative investor, consistent operating losses, persistently negative operating cash flow that requires ongoing shareholder dilution, entirely unproven business expansion plans with huge execution hurdles, and notably a real lack of major institutional analyst coverage to sort of validate or even seriously critique the strategy. It's flying under the radar of big research desks for now.
So wrapping this all together, what does this mean for you, the potential investor listening right now? The sources seem pretty clear on the type of investor this might suit and who should probably stay away.
Yes, the guidance is quite specific based on the profile. For the short-term trader, the stock is basically a vehicle. It offers volatility-based trading opportunities tied directly to news flow updates on the BNB treasury expansion, swings in the broader crypto market. It's a trader's playground, potentially.
But for the long term.
But for the long-term holder, it's fundamentally too risky and far too unproven for anything resembling a conservative holding. This is not a value investment by any stretch. It's a highly concentrated, highly speculative trade tied directly to the future price action of a single volatile digital asset. That's the bottom line. And, that leads us perfectly into our final provocative thought for you to perhaps mull over after this. Since CEA Industries now relies so heavily, almost entirely, on holding this single highly volatile digital asset, we really have to ask, does the company truly function primarily as an operational infrastructure business anymore? Or is it now, in practical terms, just become a volatile leveraged investment vehicle for BNB itself? Where exactly does the sustainable value of this company truly reside now? Is it in operations or just in the crypto stack?
That is indeed the ultimate question for CEA Industries, isn't it? And one you really need to answer for yourself before making any decision. Thank you for joining us as we explored these sources and tried to distill these complex takeaways on CEA Industries. We really hope this exploration helps you make a more informed decision in your own learning journey. Until next time.